Yeah, the great thing about studying Bitcoin is you won't really understand money until you've seen perfect money. So Bitcoin takes you down this path of the theory of money, and then you start to understand what's bad money and why it's bad, and what's good money and why it's good. And then that'll take you into the theory of investment. Like when you actually buy a bunch of corporate stocks to save your money, you're not saving, you're investing, you're making a bet on the stock. And so you start to understand the difference between saving your money and investing your money.
Bitcoin's volatility drives liquidity and growth, allowing investors to navigate price fluctuations while seizing opportunities for significant gains and ensuring financial stability in the digital economy. Michael Saylor, CEO of MicroStrategy, shares this perspective, emphasizing the importance of long-term planning when investing in Bitcoin. According to Saylor, Bitcoin's 50% volatility acts as a catalyst for growth rather than a deterrent, highlighting its liquidity, economic potential, and resilience to geopolitical instability and election outcomes, making it an attractive investment. Saylor compares Bitcoin's annual 50% return and 50% volatility to the S&P 500's 12 to 14% return and 14% volatility, suggesting that Bitcoin's volatility is a benefit, not a flaw. This volatility attracts traders and investors by adding liquidity, providing easy access to capital, even during weekends, and showcasing the network's economic potential. He recommends that investors take a long-term approach, considering Bitcoin's volatility as an opportunity rather than a risk. Saylor also pointed out that his company's investments complement Bitcoin ETFs, driving up demand and prices due to Bitcoin's limited supply. Investors can choose between ETFs for spot Bitcoin exposure, high-performance equities, or growth options, each catering to different investment objectives.
And my question is, at what point do those ups and downs stop if you're going to get all the way to 13 million?
Yeah, well, I mean, first of all, Bitcoin's like 50 vol, 50 ARR, and the S&P is more like 12 to 14 ARR, 14 vol. So if you want 12 vol, 12 ARR, you would just buy a diversified equity index. You'll get 1/4 the return, you'll get 1/4 the volatility, and some people like that. If you're going to buy a 50 vol asset, first of all, you shouldn't buy it unless you're going to hold it for the long term. Like a short period of time to hold it is 4 years. A middle period of time is 10 years. The right time horizon is the rest of your life. If you have money that you need to give to your children in 4 weeks, don't buy Bitcoin with it. If you have money you want to give to your children in 40 years, definitely buy Bitcoin with it. In 40 years, Bitcoin is going to be worth a lot more. In 4 weeks, there's no telling what it'll be worth. So think in terms of 0 to 4 years is very safe conventional assets. Think in terms of 4 to 10 years is more like investment things, and think beyond 10 years is that's something I'm buying to give to my great granddaughter. That it's going to be in the family for ever. It's like the center of London. It's been passed by the royal family of London down from family to family for 1,000 years. That, if you think of it like that, then you'll go into it with your eyes wide open.
Makes sense.
The volatility is a feature, it's not a bug. The reason it's volatile is because on Saturday night, if you panic and you needed to raise $1 million by selling $1 million of something you own, it's literally the only thing you can sell. You can't sell
That's
anything
true.
else. You can't
That's
sell
true.
your real estate. You can't sell your Apple stock. You can't sell your car.
That's so
There's
true.
nothing else you can sell. So if you can't sell it, then by definition, it's not going to be volatile because it's useless. So things that are non-volatile are useless. The volatility is what attracts the Bloomberg jockey to put up $20 billion of capital in Singapore. And that person will loan you $1 billion for 5 minutes on Saturday night at 100x leverage if your life depended on it. And you can imagine that, is that a feature or is that a bug? It's just a lot of economic power. And the fact that there's that much economic power in the network means that it attracts all of the traders, and it attracts anybody that wants to either buy or sell with leverage at any time, anywhere in the world. Once you embrace that idea, you realize that if you wanted to buy it knowing what it would be worth next Tuesday, you're a fool. But if you wanted to buy it thinking this is the most powerful digital capital network in the world for the next 100 years, and I've got a long time horizon and I just want to get rich and I'm going to hold on to it, then it's a pretty wise thing to put in your portfolio. No, we don't compete with the ETFs. They basically sell spot Bitcoin exposure. If you want 50 ARR, 50 vol, 100% upside and downside as a simple digital property instrument, you would buy the ETF, and they're perfectly fine investments. I mean, very straightforward. If you want high performance equity or optionality, you would want our equity or the options that trade above our equity. And if you want Bitcoin backed bonds or some kind of Bitcoin fixed income instrument, you would buy something that we were selling. So we're very complementary to them. And of course, both investments work well because at the end of the day, all the money invested in any of these instruments is used to buy Bitcoin. And there's only 450 Bitcoin available for sale every day by the Bitcoin miners. So when that Bitcoin gets purchased, you have to take the price up in order to find another willing buyer at a higher price level. So that's a very virtuous competitive cycle there, and we're very complementary.
Michael Saylor argues that understanding Bitcoin provides valuable insights into monetary theory, investment, and economics, especially as it heads towards significant price appreciation. Bitcoin's unique characteristics help distinguish between strong and weak currencies, true savings versus investing, and commodities versus securities. Saylor views Bitcoin's rising value as a critical asset for the United States, acknowledging the strength of the dollar while also recognizing the impact of inflation. He points out that the S&P 500's 12% annual increase reflects the accelerating pace of monetary debasement, emphasizing Bitcoin's role as a hedge to build lasting wealth. Saylor asserts that investments must outperform the S&P 500 to avoid the inevitable erosion of wealth, as lower yield options will not suffice in the long run. He highlights Bitcoin's global recognition as a digital commodity and its emergence as a reserve asset, both of which contribute to its ongoing price increase, regardless of election outcomes. Additionally, he notes that Bitcoin's widespread acceptance across borders helps shield its value from geopolitical instability, reinforcing its growth potential as it gains traction worldwide. Let's return to the interview to watch more clips and gain further insights from Michael Saylor.
Yeah, the great thing about studying Bitcoin is you won't really understand money until you've seen perfect money. So Bitcoin takes you down this path of the theory of money, and then you start to understand what's bad money and why it's bad, and what's good money and why it's good. And then that'll take you into the theory of investment. Like when you actually buy a bunch of corporate stocks to save your money, you're not saving, you're investing, you're making a bet on the stock. And so you start to understand the difference between saving your money and investing your money. And then once you understand the theory of investing, you start to understand the theory of assets. What's the difference between a commodity and a security? And why is a commodity normally a crappy investment unless it's Bitcoin, in which case it's a good investment? And then you start to understand commodities versus scarcity. So all of the investment theory, economic theory, and monetary theory that comes about when you understand Bitcoin will cause you to realize Bitcoin is just a better idea. And it will also help you make your investment decisions and make your savings decisions and navigate geopolitical currency markets and understand why does one government crash and burn, and why does hyperinflation take place one place and not another place, and how can you insulate yourself and your family from that? Yeah, I don't think Bitcoin threatens the U.S. I think Bitcoin is strengthening the U.S. I think that if you look at all the currencies in the world, the strongest currency in the world is the dollar. And so everybody in the world has either got a weaker currency, which is collapsing, or they're on the dollar standard. Like the euro is pretty much pegged to the dollar, the Singapore, the DROM, most of the quote unquote good currencies, the Swiss franc, et cetera, they're pretty much pegged to the dollar. And then the bad currencies, the weak currencies, the peso, the naira, Egyptian pounds, Lebanese pounds, Turkish lira, they're collapsing against the dollar. So it seems pretty clear that the dollar will continue to spread. But there is an inflation problem. The inflation rate in dollars is not the CPI. The best way to think about monetary debasement is to look at the the S&P index. If the S&P is advancing 12% a year, that's the rate at which the money supply is expanding in dollars. So your hurdle rate, the rate at which you have to generate an investment gain in dollars in order to not get poorer, is probably the S&P index. That's the cost of capital. And that's a pretty good surrogate for the rate of expansion of the US dollar M2 money supply. So over the last 100 years, the S&P index generally expands about the same rate that the dollar expands in money supply. So if someone gives you an idea to generate 3% after tax, buying bonds at 5% that are 3% after tax, that's kind of like underperforming the cost of capital by 9%. You're getting 9% poorer every year. So anything that isn't beating the S&P index is making you poorer in dollar terms. What's beating it? Well, I mean, the S&P, when you invest in the S&P and your money goes up 10% a year with the S&P, you think you're getting richer. No, you're just staying rich. You're staying as wealthy as you were.
By the way, we got an election coming up. Does it matter? Does it matter to the price of Bitcoin who wins?
Bitcoin's been universally accepted as a digital commodity, as an asset without an issuer, and it is the reserve asset of the entire crypto economy, and it is the most widely held global investment asset in the world. So it wins no matter what. Either outcome will be good for Bitcoin. It's going to continue to move up.
With the upcoming U.S. presidential election, Michael Saylor believes Bitcoin's price could experience significant growth, driven by historical trends and shifting political views on cryptocurrency. He points out that in previous elections, Bitcoin consistently rebounded to new highs post-election, never falling below pre-election levels. For example, in 2012 Bitcoin was priced at around $12, $720 in 2016, and $14,900 in 2020. Given Bitcoin's recent price trajectory, Saylor suggests that based on these patterns, Bitcoin may establish a new price floor, possibly never dropping below $70,000 after this election. Saylor also notes that while former President Trump has made mixed statements about Bitcoin, calling it a scam in the past, he has recently shown support for cryptocurrency. Trump has used Bitcoin for campaign-related expenses, pledged to support U.S. crypto mining, and even explored launching a personal cryptocurrency project. While these intentions may appeal to crypto investors, Saylor emphasizes the importance of considering both parties' positions. In contrast, Democrats have generally adopted a cautious or unfavorable stance on digital assets, with Vice President Harris remaining notably silent on the subject. Saylor believes that the potential impact of the election on Bitcoin remains strong, with the crypto community closely monitoring how candidates' positions could influence policy. If historical trends continue, some analysts predict Bitcoin's price could soar, potentially reaching $125,000 or more following the election. As we conclude, do you agree with Saylor's assessment that Bitcoin's volatility is more of a benefit than a drawback? Feel free to share your thoughts in the comments below. For more Daily Dose Crypto News, check out these two awesome videos on your screen. Click now and we will see you on the next video.